Hey guys, Randall Cornett here. Hope you guys are having a great day. The long-awaited SEC report on GameStop is being released today. I do not have the official document yet, but there are some prelim reports. And I'll be honest, it seems like a big nothing burger to me. It doesn't seem like there's anything. There's one good thing, and we'll cover that. But at the end of the day, it seems like there's a lot of infighting between the SEC amongst themselves on not really coming to any sort of clarification on why trading was halted during our January run-up with GameStop and AMC. So there was really no rhyme or reason or explanation on that. So that's pretty unfortunate. And I was kind of expecting that. I just think there's too many underlying issues here. But just to kind of go through a few parts of it, yeah, the securities and the SEC issued a long-awaited report on Monday on the decision by many stockbrokers to restrict customers' ability to purchase shares of GameStop and other meme stocks in January. But the document offers few clues about how the agency might change market structure rules to prevent such incidents in the future, and came to no definitive conclusions as to why those restrictions are made. So some key points here: offers a few clues about the agency might change market structure rules to prevent such incidents, which leads me to believe that this could happen 100% again. Which, again, we've kind of been stressing this. Most apes have been saying, hey, be really cautious and wary of what brokerages you're using to try and mitigate that risk. They say January's events gave us an opportunity to consider how we can further our efforts to make the equity markets as fair, orderly, and efficient as possible, says Gary Gensler. Making markets work for everyday investors gets the heart of the is at the core of the SEC's mission. The report offers an account of the rapid increase of the price of GameStop shares in January over there. Nothing that the video game retailer stock increased by noting that the video games retailer stocks increased in value by 2,700% from January 8th to January 28th. It notes the price volatility came against the backdrop of growing interest in the company on social media, whereas investors argued that the company was undervalued for fundamental reasons and ripe for a so-called short squeeze, because statistics showed that more than 100% of the shares in the company's outstanding were on loan to investors seeking to bet the price of the stock would fall. All things we already knew. Again, though, the main point that I want to highlight of this is that they can't really tell you why, and they have told us that they really don't have anything to prevent this from happening again in the future, which is pretty shitty. The SEC argues that while many short sellers were forced to close out their positions as the stock's price rose in January, and the dynamic fueled price increases was not a major factor, buying shares to cover short sells was a small fraction of overall buy volume. GME share prices continue to be high after the direct effects of covering short positions would have waned, the report said, when driven by a desire to squeeze short sellers and thus to profit from the resultant rise in price or belief in the fundamentals of GameStop. It was the positive sentiment, not the buying to cover, that sustained the weeks-long price action of GameStop. So what they're saying is, and basically confirming, which we already all knew, but the shorts have not covered. So that's the shining light of all this, in my opinion. We know, and the SEC is saying, hey, look, that price action that we've seen, a small fraction of it was the fact that there was covering going on. So we do know, and that should make us a little bit happy that, we already knew this, but there has been no real covering, even in that initial, 2,700% run up on GameStop, which is encouraging to say the least. The report also outlined the potential role that the clearing agencies played in the decision by retail brokers like Robinhood to restrict purchase of GameStop and other meme stocks in January. The NSCC, a subsidiary of the DTCC, is a central clearinghouse for stock trades in the U.S. It acts as a guarantor of security sales, enabling market participants to assume their trades have been executed even when the actual settlement of the transaction occurs over the course of 2 to 3 days. Robinhood and other brokers maintained that they restricted purchases of volatile stocks because of surge in barters, and increasingly volatile stock led to the NSCC to require brokers to post billions of dollars in extra collateral. The SEC report does note that on January 27th, the NSCC made intraday margin calls from 26 clearing members totaling $6.9 billion. So On the 27th, there were margin calls totaling 26 from 26 clearing members up to $6.9 billion. I'm going to be paying attention. I'm going to go see if I can identify which of these clearing members were actually margin called. The SEC reports that Robinhood and other brokers have maintained that these margin requirements were the sole reason for restricting purchase of GameStop, but senior officials at the agency told reporters on a Monday call they cannot rule out other possible reasons. So they're saying they really don't fucking know, right? And there's no clarity on why the whole thing was traded. So this is a big deal. Furthermore, the SEC report does not give retail investors any assurances these sort of trading restrictions would not be placed on them again in the future. In their customer account agreements, some broker-dealers reserve the right to decline custom orders or cancel trades without prior notice. So if they have that notice, that disclaimer, well, you're fucked. Such actions could be taken, for example, for legal, compliance, or risk management reasons. The SEC report does not recommend any new rulemaking that would affect these customer agreements. So the SEC is saying, hey, tough luck. You guys are on your own on this. That's about the best way that I could put it. They don't recommend any new rulemaking. So in my opinion, I've just lost all faith in the SEC. They're complicit in all of this. Senior SEC officials noticed on the call that despite the volatility seen in the meme stocks in January, the basic infrastructure of U.S. equity markets held firm. Meanwhile, the report encourages readers to view the GameStop saga as an event that highlights the interests of growing shares of Americans have in the security market. So they're trying to say, oh, well, people are still interested in the market, so they're not going to be when they're reading shit like this or hearing complacency from the SEC. The extreme volatility in the meme stocks in January 2021 tested the capacity and resiliency of our security markets in a way that few could have anticipated. At the same time, the trading in meme stocks during this time highlighted an important feature of the United States securities markets and the 21st century: broad participation. What they mean is the rich stealing from the poor. Because broad participation doesn't mean equal participation or equal rights or fair rights or anything like that. The report concluded by saying that the events provide an opportunity to reflect on issues surrounding market structure, including the impact of digital engagement practices or gamification on retail investor behavior, the wisdom of reforms that would shorten the current three-day settlement price cycle and potentially reform the practice of payment for order flow, where market makers pay for the right to exercise or execute their customers' orders. Gensler has previously said that he has directed staff to research these areas and the agency may engage in rulemaking to reform these practices. But just not right now. So, like I said, it turns out to be a big nothing burger, almost like a slap in the face to me. It's encouraging to know that they haven't covered, and we're going to, we obviously have a fight to keep battling, or a battle to keep fighting. But this is really just disappointing and discouraging from the SEC themselves. I mean, in my opinion, they're just as bad. So take it for what you will. When the actual document comes out, we will look more into that. I hope you guys enjoy the rest of your day, and I love you long time. Peace.